I was saying that perhaps people are getting a little ahead of themselves. Do you think that it's because the path to the second half, the more optimism that we're expecting later in 2023, is perhaps a little premature based on it's hard to know what's going to happen in the first half and whether the pain will truly be realized there?
I do think to some extent that we've seen, if we go down the balance sheet, the fixed income markets have certainly been much more enthusiastically of late, particularly the longer end of the curve, that the Fed is going to be shifting its policy sooner rather than later. And at the very headline level, that's true. You've continued to hear Fed speeches about moving away from the 75 basis point rate to a 50, but you're still talking about terminal rates that might be in the fives. A and B, I do think that you're going to, over most of my career, we've certainly seen nominal interest rates along the curve looking more like nominal GDP. So we still have long end interest rates that are still relatively low against what I think most people would suggest nominal GDP might look like a year from now.
Well, this is important, Jack. Are you basically saying that you don't buy this idea of the trade into long bonds, which so many people are saying not only is the consensus, but is the haven bet for next year?
Well, I think it's a haven bet, and as we talked, this idea of being a little bit more balanced. I do think that it is a haven to look at longer duration fixed income, in particular because where we have seen a move in higher yields, you've actually seen most of that yield recovery in fixed income come in the form of discounts against par value. What that means is that bonds are going to remain very responsive. And we look at where volatility is, fixed income volatility remains multiples higher than what you're seeing in equity market volatility. So I do think there's a case to be made for owning that long duration as a hedge. But I think it's really folding the role as having a hedge for investors who are looking to actually invest in the equity market, where they're going to get their actual longer term purchasing power protection, finding dividends, growing dividends, and looking at the parts of the market that actually benefit from a slowing of inflation and benefiting from some ongoing pricing power.
So where is that?
It's a barbell, if you will, a barbell or a balance.